In the first quarter GDP numbers, let's discuss the state of the economy with the principal economic advisor, Mr. Sanjeev Sanyal, joining us today on ET Now. Sir, thank you very much for taking your time out and speaking with us. This is Ruchi, Bhatia. Let me first begin by asking you on the headline number. We've seen the first quarter numbers coming in at 20.1% as against a contraction of 24.4% that we saw last year in the same quarter. A lot of strength being seen in sectors such as construction, manufacturing, mining as well. I want to understand from you, given the fact that we have seen a healthy number this time around, where do you see things headed from here on, and are we on path for achieving the 9.5% target that has been set out for the year end?
The number was expected to be significantly high because obviously last year's base was low. So a number of 20% odd should not be surprising. It does show that the significant amount of momentum has been regained. It should also be noted in this context that this quarter also saw the big spike from the second wave. So in that sense, significant part of the economy was in lockdown. So we managed to get this number of 20% plus year on year, despite being going through a second wave and large parts of the country being in lockdown. So I think we are well on the way to seeing a GDP growth rate. I would think in the double digits. I would not be surprised if the economic survey number of around 11% for this financial year will not be achieved.
Right. We are also seeing, sir, some of the high frequency indicators pointing to a deepened economic recovery, especially in the second quarter, given the fact that we're seeing a lot of state-wise restrictions that were eased. But now, once again, concerns are emanating on a third wave of COVID-19. How big a downside risk do you see another wave of COVID-19 could be for us as far as India's growth story is concerned?
You're right. Most of the high-frequency data does suggest that the economic numbers will be even stronger for the quarter of July, August, September. That's, again, not surprising because the second wave came off, a lot of state-level restrictions were removed, and although the construction and the manufacturing had been strong in the previous quarter, they accelerated further into this quarter, and many of the contact services that had been closed down are now being opened up. In fact, into September, they'll probably be opened up even further. So I think this quarter will see even stronger numbers. But of course, there is always the possibility of a third wave. Now, nobody can predict that. I'm at least not a believer that any of these models can accurately predict ex ante where and when a third wave may happen. So it's a possibility, and the best we can do is maintain high level of surveillance. But as you know, our vaccination process is now in full tilt. We just a few days ago did 10 million jabs in one day. So I think given all of that, we are in a position to be able to sort of weather a third wave if and when such a thing does happen.
If you look at some of the numbers that we've seen, at least from the fiscal deficit data as well, that goes on to show that we're seeing a very healthy tax growth. Besides that, exports are also showing good amount of recovery. Do you see this trend sustaining in the next couple of months as well, sir?
This I'm quite confident about. I think exports have been doing very well. Many of the supply side measures we have done over the last year or two are beginning to clearly feed through, and we are being able to capture markets. So this is not just about recovery of global markets and demand, but about us penetrating many markets. So I'm quite confident that we are going to do well in exports. We are also seeing very strong flow through to FDI. So a lot of international money coming back in. You're of course seeing that in portfolio money as well, with financial markets being quite strong. So I think the momentum build up in the economy is quite good. Of course, as you yourself mentioned, a third wave would be something that we need to still watch out for. But I think we are in a good position as things stand right now.
In fact, while earlier in the day when I was speaking to a whole host of experts that look at the GDP data very closely, they believe that the growth in the contact-intensive portion of the economy has trailed their expectations. I want to understand from you, given the fact that, of course, there just when things were beginning to open up, there's of course a concern of a third wave as well. Do you believe that this could dent consumer confidence even further, and just when we were expecting that demand will come back, especially for besides the contact intensive sectors, for some of the other sectors like the auto sector as well, that has been reeling under pressure, not only because of demand but because of some external factors like the semiconductor shortage as well. How big a spoil spot could it be, sir?
I think we need to distinguish between the supply side and demand side issues. As you will know, our economic approach has continuously been stressing that there is a supply side aspect to this COVID shock. So, of course, there have been supply side problems internationally, whether it's shortages of chips or shortages of containers and so on. And so, though that is an issue, but it's a different issue from the demand issue that you talked about. And the problems that, of course, contact-intensive services face. Now, as far as the supply side issue is concerned, I believe these are getting sorted out as investments are coming through. But on the contact level, contact-intensive services, let me say that, things like live entertainment, travel and tourism and so on, clearly certain amount of restrictions will have to continue because of the risk of a third wave. However, within that constraint, we have eased them up very significantly, and we have done it in a very systematic, step-by-step sort of way. So you will see, for example, in many places, travel and tourism is coming back, at least domestically. Now, obviously, international travel will remain restricted for some time, and there are states like Kerala where even contact entertainment and so on will have to be kept restricted. So I think there will be some restrictions there, but even there, you may see that, wherever we can open things up, we will open it up with obviously making sure that, health concerns are kept in mind.
Globally, everybody has been watching out for the cues from the US Federal Reserve. In fact, Jerome Powell, the US Federal Reserve chair at the Jackson Hole Symposium, has now said that they will be looking at tapering by the end of this year. What kind of an impact do you foresee that we will see for the Indian economy as well? Because back in 2013, we did see a lot of flight of capital from the emerging markets like India. Where do you see the things headed at the moment?
Well, I mean, eventually the liquidity conditions will have to be tightened, and some sort of tapering will have to be done. That's a good thing in the long run, because obviously you don't want so much liquidity sloshing around forever. So it's not surprising that the US Fed is thinking about this issue. But I think the experience of the taper tantrum last time will make sure that while they do taper, they will do it in a smooth sort of way. So I think that is something that they will have in mind. And of course, on our side, we have built up huge amount of foreign exchange reserves along the way. So I think we will have a significant amount of buffer here to be able to weather this. So I'm not particularly concerned about what will happen, and so, there might be some ripples along the way, but we are more than prepared for withdrawal of global liquidity. And as I said, the US Fed itself will be quite careful not to do it too quickly. I mean, this is a real issue for not so much for India, as I said, because of our foreign exchange reserves, but there are countries in the world which would not be able to withstand a very rapid withdrawal of global liquidity.
So before I let you go, and this is going to be my last question, we have seen up until now the government doing bulk of the heavy lifting. This time around, in terms of private investment numbers, also things are in a way looking up. But how hopeful are you that this trend is going to continue in the months to come as well?
We can clearly see, private investment coming back in many areas. Cement, steel, and so on. But also, large numbers of new unicorns have popped up in the last year or so. Large number of startups which are innovating in all kinds of new areas. And of course, a huge amount of supply side measures have been done in the last year or so. New sectors have been opened up. So I think we are seeing a lot of animal spirits coming back into the economy after a long time. Now, the sort of buoyant conditions in the capital markets, of course, makes it easy to raise risk capital. And the good news is that despite the big shock that the economy went through over the last 18 months, the banks seem to be also in reasonably good shape. The very worst fears of cascading defaults and so on have not come to pass. So we have a buoyant capital markets and a banking system which has not yet perhaps gone out there and begun to lend aggressively, but certainly is in a position to do so as and when required. So I think the financial conditions, even if, by the way, global liquidity eases off, I think in India we are in a position to support a rapid expansion of private investment. Incidentally, I would also like to add that the government itself is in a position to do so. Our fiscal numbers are much better than many people had expected. So I think even from the government's perspective, we can sort of support a lot of the investment in infrastructure and other things that Prime Minister had recently talked about. We are in a position to push investment ourselves. So I think we are in a good position right now. And as I said, barring a third wave, which is unexpectedly strong, we should be in a good place. But even there, I think our vaccination drive is also doing a reasonable job. So I think we should be reasonably confident we can do well.
Okay, all right. On that note, sir, thank you very much for taking your time out and speaking with us today at ET Now. With that, it's a wrap on this edition of News Now. Many thanks for watching.
Thank you very much.